Today, Solana breaks its downward trend to end the week. A Bahamian regulator announces it seized billions of dollars of FTX's digital assets. And Blockdaemon CEO Konstantin Richter discusses whether crypto's adoption rate will slow down following the FTX collapse. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices are mixed to end the year. As of noon Eastern, Bitcoin dipped, trading around $16,500. Ether dropped below the $1,200 level. However, Solana soared more than 15%, breaking its downward trend. Sam Bankman-Fried was an early and prominent backer of the Solana project, and its association with the disgraced founder has been dragging the price down. Solana dropped about 50% between November 2nd, shortly before FTX filed for bankruptcy protection, and earlier this week. In that same period, Ether fell about 20% and Bitcoin dropped about 17%. Bitcoin, Ether, and Solana were all down for the week. Okay, let's talk about the top stories. First, the Securities Commission of the Bahamas announced on Thursday night that it moved billions of dollars from FTX's Bahamian subsidiary into its own digital wallets for, quote, safekeeping. In this news release, the regulator said the funds are being held on a temporary basis until it's directed by the country's Supreme Court to deliver them to customers and creditors, or liquidators. The watchdog had previously confirmed it was holding some of FTX's digital assets, but did not specify how much. The regulator said that it transferred the funds the day after FTX filed for bankruptcy last month, following information from SBF concerning cyber attacks on the systems of the exchange's Bahamian unit. The commission noted that the funds were valued at more than $3.5 billion based on market pricing at the time of the transfer. Next, several FTX customers have asked a U.S. bankruptcy judge to keep their names confidential, arguing that exposing their identities could make them a target for scams. The customers, who are from outside the U.S. and say they're owed nearly $2 billion, made the request in a Wednesday night court filing. They also said that revealing their names could undermine FTX's efforts to sell parts of its business, which it's trying to do in order to make more money available for creditors. Typically, bankrupt companies reveal the names and amounts of debt held by their creditors. FTX is also seeking an exception that could keep its customers' names private. The request has been opposed by the Department of Justice's bankruptcy watchdog as well as some media outlets. The judge will hear arguments on customer privacy at a hearing in Delaware in a week and a half. And finally, Bankman-Fried's next court date is set for Tuesday, where he's expected to enter a plea. That's according to Reuters, which pointed to court records, noting that the former crypto exec is scheduled to be arraigned in Manhattan federal court. While SBF has acknowledged risk management failures at FTX, he repeatedly claimed that he does not consider himself to have criminal liability in the fall of the crypto exchange he founded. Prosecutors have accused the 30-year-old of engaging in a years-long fraud by using customer money to support its hedge fund arm Alameda, buy real estate, and make political donations. We reached out to SBF's attorney, but as of noon Eastern, we hadn't heard back. Bankman-Fried's top associates, Caroline Ellison, the former CEO of Alameda, and Gary Wang, FTX's co-founder, pleaded guilty last week for their roles in the collapse and are cooperating with prosecutors. All right, on to our main story. Following FTX's implosion last month, Blockdaemon CEO Konstantin Richter posted this message highlighting his takeaways from the crypto exchange's shocking collapse. He spoke with Crypto World's Talia Kaplan about his letter and breaks down what he thinks will happen in 2023 as the fall of FTX continues to weigh on the industry. Take a listen.
You're the CEO of crypto infrastructure provider Blockdaemon, and I know your customers range from financial services firms to some of the largest exchanges. So what kind of solutions do you provide, and how do you serve your customers exactly?
We really see ourselves as a middleware platform, which means that we safely connect institutions to blockchain networks like Bitcoin and Ethereum. So we allow institutions to offer their customers the ability to purchase Bitcoin and Ethereum and to send it around ultimately. And so we make that process seamless and ensure that the institutions are protected from the chaos that is crypto, which means that these networks are all open source. They're updated and controlled by thousands of users, as a true decentralized network is. And thus we institutionalize the chaos. And so we're here to make this seamless, safe, and secure.
So you mentioned chaos, and you published a message last month following FTX's collapse. And in it, You mentioned that you tried to work with FTX, but the crypto exchange insisted on running their blockchain infrastructure in-house for privacy reasons. So what does this show you?
Well, it's hard. There's a lot of different reasons why folks want to outsource information, but I think when it comes to transparency and reliability, it's important for all major players to work with multiple different infrastructure providers and also not just rely on their in-house infrastructure, because it just breeds the potential for abuse, right? And so I think when it comes to technology, specifically in decentralized networks, working with companies who clearly adhere to regulatory requirements, get externally audited for security, and are controlled by a transparent board and investors is really, really important. It's always interesting to us that the largest and most trusted exchanges in the space have great relationships with us. Everyone, I would say, of note uses components of our infrastructure somewhere in their stack as a failover system, for example, in order to have also, again, less risk associated by just running an individual server on their own, which was a little more the FTX situation, which controlled all their own infrastructure for obvious reasons now, because obviously a lot of things happened that they didn't want people to see.
So this year we saw increased institutional adoption with more Wall Street firms moving into crypto. One example, the new crypto exchange EDX Markets, which has backing from Citadel, Fidelity, and Charles Schwab. NASDAQ made its first big push into crypto this year, offering custody services for Bitcoin and Ether to institutional investors. So do you see more of this happening in 2023, or do you see the adoption rate slowing down as a result of FTX's implosion and the crypto winter we're currently experiencing?
Yeah, I don't necessarily see a slowdown in institutional adoption of rails, meaning companies like NASDAQ, large banks are going to continue to work on Bitcoin and Ethereum rails, on permissioned networks, on stablecoin integrations. I think we're going to see a slowdown in volume of transactions through these networks, mostly because the crypto brand has taken a heavy, heavy hit. I think consumers are going to be a little spooked for a little while, but I think the cat is out of the bag, so to speak. And so, in terms of our services, we've seen continuous growth throughout the year. Our company has grown threefold since the beginning of last year, even through this crypto winter, and our customers are exclusively institutional. And so, I don't necessarily see them walking away from this, but I think there's more focus on quality, and so quality in crypto is Bitcoin, Ethereum, large market cap, trusted tokens, US dollar stable tokens, and so we'll see a continuation of platform evolution there. But yeah, I think volume will be a little lower, and so we're preparing for continuous institutional adoption, slower consumer adoption for 2023, and then we see that uptick in 2024.
In that message you published last month, you outlined some of your takeaways, noting that complex systems will fail over time if their governance mechanisms aren't transparent. And you also argue that FTX's downfall seems to be as much the fault of an individual defrauding users as an absence of oversight. So, what do you think really is the answer here? And can you just elaborate on that point you made in that letter?
Yeah, sure. I think when we want to build trust and decentralized system, it's important that the participants in the network verify that they're trustable. And one way to do it is to ensure that there's oversight. I think the key takeaway from my side for FTX is I was not aware that they didn't actually even have a board, that the majority control of all related entities was in the hand of one individual, and there was actually zero oversight. And I think if, for example, transparency here would have been very helpful. I think if people would have known that there's no oversight nor governance structure around, ultimately Sam, who was the CEO and owner of FTX, they might have treated FTX very differently. I think, and so, having more public information about companies in terms of ownership, how are decisions ultimately made, and who is held accountable would allow for people to trust them more. And that was really the point of my letter, to kind of point out, like, how does this look for us? Like, I'm a founder, CEO, but I no longer can control the company, Blockdaemon, for example, the way I want to. We have board members like Comcast and others that have votes and control and review budgets. They dictate the money we can spend and who can touch it and where it goes. And I think it's important for crypto companies to be public about that, to not just do proof of reserve, but really what we call proof of governance, right? And so any entity where a single founder can, for example, change the laws of the company, should probably not be entirely trusted over time.
Now, I heard you say in a podcast in April that you were bullish on crypto and the adoption rate, and you touched on it here today already a bit, but do you still feel that way after everything that has transpired since then?
Yeah, I mean, in a way, and more than ever, because, and I was talking to investors earlier, and the general consensus is, listen, what happened to crypto in 2022 is really bad for the crypto industry and the market. Like, let's just be clear. This is a hard blow. We all thought FTX was a lot better than it was. I think it's a great reminder to not trust individuals and to verify rather than trust. And so I think we take the learnings here. But the base case for crypto and DeFi is exactly around avoiding something like FTX happening. And so, FTX was not crypto. FTX was a one-man fraud that was using components of crypto in order to solicit funding. But the promise of crypto in taking out middlemen, in disempowering individual institutions from misusing customer funds, is more true than ever. And so I'm as bullish as ever. But I'm a long-term person in the play, in the space here, and I'll continue to be excited. I think Bitcoin ultimately has the potential to, save large components of what we value as a community and society.
Okay, that's all for Crypto World this week, but we'll be back again on Tuesday, and we'll see you in the new year.